Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Okay, so the supply and demand flip concept this video is basically being uploaded, and I'll get now to the breakdown of the trades. So first trade of the day we have, based on the concept that I just said, is the next. So we had somewhat of a bullish market, right? I did like the fact, not like per se, but basically well, let's just call it liked. Did like the fact that we had basically had liquidity, we had taken that, and after that we broke so many structure, right? As you can see, in the past, I would have considered either this low, or this low a supply and demand flip. But in this case, I chose this as my supply and demand flip, right? So in this point is when the market changed from demand, to supply, right? When we broke that, because the demand was taken by supply, right? So at that point, I'm expecting somewhat of a downwards market, right? And the area that will change, let's just go with that for now. Okay, so we had this downwards move, we had reacting to extreme. This is another extreme that we basically have to be careful of. It's not an area to actually take a reaction or anything, a risk entry or anything like that, but it's an area to keep in mind pretty much, simple as that. So we had liquidity above the area, below the area, sorry. We didn't have liquidity above it. We had taken liquidity. Of course, each high and each low has liquidity, right? But it has taken liquidity, so that counts more. That counts as more importance. And when I get up, keep in mind, well, get up, wake up, however you want to call it, at 7:05. This is what I get to see, right? I thought about taking a risk entry around the 50%, as we were right inside of the order block. With the stop loss just above the high, and basically looking for downwards movement, which in this case would have not worked out. What I do see is that we created a lot of liquidity, right? So those are reasons for price to go up and then potentially continue to go down. So yeah, just that. So we had FR is failed reaction, right? We have an area, that has confluences that took basically supply, changed it to demand, and basically took demand and changed it to supply. So it's a pretty important area. The price basically is reacting, but then failed to react as it broke high, right? So basically on the concept that I talked about on supply and demand flip, this right here is a supply to demand flip, right? So I decided to go for the cause of that, and as you can see in this case, it didn't work out. Decided to go for this because it took liquidity and everything. At the same time, we did have liquidity below us. So what I failed to identify at this point was this potential trade that we had there. Actually, see if I can make this a little bit, yeah. So we did have this extreme order block that basically took liquidity and worked out better. At the same time, it didn't actually cost much per se, right? But in this case, we might have been able to get out with a break even or something like that. So yeah, that's pretty much it. Here, this area was my my demand area, right? That area basically was mitigated by this and then broke higher, and that was mitigated. Okay, so my low of basically demand, my area of demand was this area right here, because it came from mitigation and it caused a reaction that then broke structure, right? So this was the area that I consider if we broke lower that, I was looking for a sell. So at this point, I thought about taking an entry, but to be honest, I just didn't have the courage to take it and missed out on a really good opportunity right there. Then we had the break of structure. I decided to go for the cause of that, as you can see, the small pause. My stop loss was a little bit above this high, right, to cover spreads in case price decides to go above that. It could have easily gone for the extreme as it is. But yeah, that's pretty much it. when we basically made this move down, my stop loss was about these highs, right? The highs that basically reacted out of the order block and caused the whole thing. As I do expect price potentially getting inside of this order block and giving another entry, which is what ended up happening. So, and then when we basically broke that, I was going to move my stop loss to break even, but basically didn't get to because, well, we had such a strong momentum that I just didn't even realize that we had broken it, right? So I received the alert that we had broken this low, and when I came, it was somewhere around here, and price just fell, just a small 1 second retracement, and then continued to fall. So that's the breakdown for this trade. We basically took liquidity, we changed from demand to supply. We had already reacted to an area, so that's an extra confluence that in this case we actually didn't need, as we had a pretty strong supply supply flip, right? Demand to supply flip. And we basically went for the confirmation entry in this case, which worked out amazingly and could have even gotten into the next entry, which again would have been another take profit. 5R, as usual. I was talking to a friend with this about this, that I kind of do want to start aiming at logical areas, not fixed R's as targets, right? But yeah, something that I really have to work on, as it's not something that you change out of nowhere. So let's continue with the next. After this push down, push up, whatever that was, I was not expecting much to happen, right? So I wasn't paying attention to price as much as I maybe should have been. And I did kind of miss out on this entry, which I didn't entirely like, to be fair. This does come from a reaction on the 15-second time frame, if we look at it. Let's see it. So it does tap this high. Basically, we have a pause before this break and everything. So this is even a supply and demand flip, right? Because this caused a reaction, and then price broke that area that caused a reaction. So that's a pretty strong confluence. But as it happened on the 15-second time frame, it's not something that I was even aware of. So yeah, just didn't even see it. And as I said, at this point, I wasn't actively looking for trades. So we got that basically, and this trade was amazing. I was really scared to take it. I wasn't feeling confident enough to take this trade, as it was such a simple, or such a just, I don't know, looks so dumb and easy in a way, of course, that it just has so many reasons to take it that I don't know. I just felt like I didn't want to take it, to be honest, and I was scared, and I just ended up not taking it. But the thing is that this is the area, right, that where demand was respected, right? So this is my area of demand. We could have also considered this as that pause, broke this high, and then came back and was mitigated, right? Reason why I actually had a trade place here that we'll talk about later, because I actually took a loss. And basically, when we broke this low, we had that small pause right there, that small pause, beautiful small pause, that will cause us this break, and then the demands to supply flip, right? And we later even create liquidity. We create a range, right? Liquidity above, liquidity below. As I've said in the past, what I expect when we have a range that has liquidity both sides, I expect price to actually go for one side first, which is usually the side that it goes to first is usually the side that it decides to go to, right? So we took liquidity from the downside, we took liquidity from the upside, and then continued to go lower, right? So what happens here, which is something that I've explained a couple of times, buyers are here, sell stoppers are here, and same here. We have sellers here with their stop loss above the support, the resistance, and we have buy stoppers here, right? So everyone's taken out before price actually makes its move, right? So people believe that price could go up when it breaks this, and people believe that price could go down when this is broken, right? So price gives them the reason, both at the same time, taking all of them out, and basically then continuing with the move that it wanted to do, right? So that was the easiest 5R that we could have accessed. As an example, we could have aimed at this low, right, expecting to at least equal lows to be created or something like that. But yeah, that's pretty much it. That's the breakdown of that trade. We even created liquidity. It was crazy. That trade was just so simple, so good. But yeah, I have a somewhat of a, I don't know, vendetta with those trades, because I always have the opportunity. I see them, I spot them, but I say, nah, it's just because it's, look at the size of the candle. Such a small candle causes such a strong reaction, but it's not just a candle, it's what it represents or what it did. So we then have this area that took liquidity, broke down, price did come back to react. I thought about taking this trade too, but I don't know, it just seemed a little bit risky, as we were already on a pretty strong push and we were close to this area, and we were kind of, as you can see, we were very strong at the beginning. We have a very strong push, right? And then we start to slow down, right? We're not making large and strong moves down. We're slowing down, right? And that kind of gives out a somewhat of a feeling that price could easily just start pushing higher from that area, right? Which kind of happened. It did break the low, and then continue to go higher for a bit. Then we broke again down and then continue to go higher. So, so basically, this is a confirmed, to call it somehow, supply area, right? That if we broke, we changed from supply to demand. At this point, I was looking for this trade to this extreme. I didn't like the fact that we were in extreme, but we didn't have a pause, we didn't have a range, we didn't have anything to go in the middle. I have had so many cases where we have a clean push and price won't react to the extreme because it's just very far or something like that. Can't really say for sure why it does that basically, but it usually reacts around the 50% of the whole thing, which was this case. And hell, I even thought about taking something around here, but I don't know, I just didn't want to take the risk on that. So we then push higher. We reacted to this, which could be considered, I don't know, mitigation block. Didn't really analyze it. I just saw that it reacted to that low, just found it interesting. But yeah, so here we have a demand break. The order block that caused it was that, right? So I decided to go for that. As you can see, this area does cause a reaction. We have 2-3 candles, right? Even with just this one right here, could have been more than enough for me to consider that as a demand area that has basically caused a reaction. And basically then this area, right, causes another reaction, right? As you can see, it's just one candle. That's good enough for me. And we flip. Right, so we had broken demand because if you look at this, that's actually, it's a supply and demand flip. I don't know why I chose to call it demand break there, but yeah. So we flip to demand again, and the area that caused it is just that candle. And I had placed the trade and everything, but I just said, you know what, let's just not take it. I had placed the trade. I could show you. No, I don't want to show the mid trade because yesterday I had to remove the numbers and everything. But I had placed the trade and everything. I do want to believe that it would have been triggered in, right, as price went pretty deep into the area, right? But I can't really say for sure if it would have been mitigated or not. But just another very simple trade, not gonna lie. It did create somewhat of liquidity, not something that I would really consider, right? That right there, because it's very small, not that significant per se. So yeah, just another missed out opportunity. I was thinking about aiming to this area, right? That would have been a 6.74 R, which would have led well to, I don't know, somewhere around maybe a 1.7% or something like that instead of a 1.25 on the 5R basically. And yeah. So the loss that I took here was the trade that I forgot to delete that we had there. So I basically took a very dumb loss right there. It does cause a reaction, right? So that area, look at that. That area that was a small reaction. But based on this same pause, we break major structure, price comes back and mitigates it, causing a reaction. So having that concept, now that I have that concept, it looks so clear, so simple. And I have had these moments every time that I learn something new, new concept and stuff like that. The first few times that I say it works out so amazingly, and then, well, it's just, I don't know, I fail to identify it, or it doesn't create as clean as in other cases and stuff like that. But yeah, that's pretty much it. I thought about maybe, taking a trip. It's just, I don't know, it's just such a small area. Again, same thing as this, but this made even less sense in my opinion. And I was not going to be triggered anyways. If I took it to the open or to a 25, whatever I decided to do, I was not going to be triggered as it barely tapped the area, right? So the last sell that I took was this one, which was closed somewhere around here, because I was on the streets at this point. Actually, in this candle, not sure where. I can actually see it, can I? Yeah, gotta check out my MetaTrader. But it's pretty much. I was on the streets. I received the alert that I love this. I received the alert that I had been triggered. I didn't receive the alert that I was basically triggered out, stopped out. So I was really happy about that. So I stopped in the middle of the street. I was on my bike and decided to check where we were and realized the strong reaction that we had made. And at the beginning, keep in mind that this is just one flip, right? When I left, it was only one flip and we were making this. I did leave also an alarm here to know when we broke the low, to basically move my stop loss to break even in case we were already mitigated, right? So triggered in basically. And at the beginning, we're talking about just the flip, right? I didn't wait for the break of this one. And that was because of this concept, right? This is not just a change in the trend. It's a change from demand to supply, right? We had an area that was respected and now it's broken, okay? So supply took over demand and the area responsible for that is that pause. As simple as that. Could have gone for 25, making it a little bit easier to target and everything. But yeah, went for that. So if we even, let's say we waited for that break after the flip, right? We have the flip, we have the break. We had liquidity. Price comes back and even creates more liquidity with those equal highs, right? So it's just, even if we took more time to place this trade, it was more and more evidence, and yeah, pretty much evidence that was basically piling on each other that basically indicated that this could be a pretty good trade, right? So if I was still in the charts at this point, I was very convinced. I want to believe, of course, that I would have been very convinced of this trade. At least, I'm not saying that it would have worked out 100%, but we do have such good confidences that we do have a good probability of that working out, right? So, yeah, that worked out amazingly. And I have here, that was closed at 318. So 318. Oh, it was higher than that. So here, basically, one more. And there. That's where it was close, right? So I won to a 3.54, sorry. It was a 220 win. It was a little bit lower when I closed it. But well, it just probably wicked higher and basically ended up with a little bit less of a win, because it was somewhere around 240 something, so it was very close to the 1%. I said, you know what, let's just close it. As I had so many losses, well, not so many losses, right? I had 3 losses, missed out on 2 really clean trades that, I don't know, just worked out amazingly. Could have passed the verification again today. But yeah, I did way better than what I did yesterday, right? So that's something that I am happy about. And yeah, I think that's pretty much all that I want to talk about. Really good trading day. I think it was a pretty clean day. I was not aware of the news, and in this case, they actually worked out great for me. But it would have been triggered out and basically half loss if price decided to impulsively go up instead of just go down, right? So from there, but that's pretty much it. I hope I was able to explain the supply to demand flip term or concept. I am sorry that I've misled you on that, but I've said many times that I'm still a developing trader, and sometimes I use concepts that, well, I don't know. There are concepts that, well, I basically I don't know, I have in my mind, and I don't even remember where I learned them. Could have been on a YouTube video. Could have been just how do you call it? Experience of mine. Just saying, well, we actually had this in the past or something like that, so it's just like that. That's why, as an example, I haven't done anything like a course or anything like that, because, well, not that much of a good trader to do something like that, right? So I'm improving to later be able to help you improve, right? And I think that'll be better for everyone. Okay, so yeah, that's pretty much all that I wanted to show in this video. I hope you enjoyed, hope you take something from it, and I'll be seeing you soon.